Airbnb, DSCR loans. Have you heard any of those terms? Maybe you've looked at sites like AirDNA and you see a property that can make tons of money. Maybe it can. Maybe it can't. Maybe it's in a market right now that has fantastic rental volume and you could make some money. Well, the question that comes up, short-term rentals oftentimes fall under hotel guidelines and require licenses similar to what a hotel may be required to have. In the state of Florida, short-term rentals fall under that category of the Florida law. Do you have your bases covered? If you're using an online website, maybe they're collecting your sales tax, they're getting that sent in for you, that's fantastic. Maybe you have proper insurance that covers short-term rentals. But what happens if the county changes rules on short-term rentals? What happens if you bought one in an HOA? Almost every HOA states that a lease must be a minimum of 12 months. What happens with an Airbnb? You're not meeting that requirement by any means. Can some do it and skate under the radar? Sure. But eventually, one of those little pieces is going to drop. And then you now have a problem. So if you're looking at a property today, maybe thinking of buying it, what if you have to change that to a long-term rental? What if you bought that property to be an Airbnb and now you can't rent it as an Airbnb anymore? Maybe you bought it in a peak time of the market and you simply don't have the equity to sell. What do you do? That property may have to switch to a regular long-term rental. Most HOAs and counties are not going to have a problem with a lease that is a minimum of 12 months. This is what we are talking about with the term long-term rentals. Now we are having people come in that are going to bring their own furniture. They're going to cover utilities. They're going to be responsible for cable, internet, things of that nature. You are responsible for the property itself. Now, when you look at the numbers, people went Airbnb for a reason, because you made a lot more money. Long-term rentals, unfortunately, do not have that price range. It's just not there. But as the market shifts, as you've made some money under the Airbnb umbrella, maybe you set some of that aside, maybe you didn't. But as we look in the future, even if you're getting a lot less, maybe even a little negative with the rent income versus your monthly payment, why would you keep a property as a long-term rental? Well, if you've had the property for a length of time, you may have some equity. Maybe you just bought the property and you don't have any equity. Two very big differences. But if it doesn't make sense to sell today, looking at it as a long-term rental, even if you are having to contribute a little bit of money each month, the tenant is still paying the majority of your mortgage. So down the road, 5 years, 10 years, 15 years, now you have equity in the property that has been mostly paid by the rental resident. So while you may lose that cash flow on a monthly basis, you still have an asset. Maybe you even got the property at a time that had a fantastic interest rate. Why let the property go for a loss or even break even when now you can have the property as a longer investment? Think of it as a 401k that you can take before you're 65. If you contribute a little bit of money each month, the tenant's paying most of it, and in time you have equity. In time you can sell this property, or maybe you get the mortgage paid entirely. In 2006, when we hit a peak of the residential market, many owners were in a bad spot. Some either kept it the way that it was, or others were able to refinance at some point. Some were even able to go from the 30-year mortgage at the right time to a 15-year mortgage, and also cut out some of the time they would have been paying the property. And for those owners today, many are almost paid off in the mortgage. Was it worth keeping for the long run, even though the market peaked out in 2006? Absolutely. Could they have sold in 2020, 2021? Yeah, they could have. But now they have a property that is completely paid for. So while still working, while having other income, the property can be managed. The property can be handled. And now you're looking to set up for the future. So if you're worried about your property, maybe some changes in the county, maybe some changes in the neighborhood, let's talk about your property. Let's talk about how we can transition to a long-term rental and keep your goals where they need to be. My name is Baron McWright. I look forward to talking to you very soon.